Everybody, welcome to your weekend edition. It is Friday. Cheers. Hope you all had a great trading week. I know it's been a roller coaster of a ride, some big moves out there. Certainly, I know that the crypto group among us probably suffered a little bit of pain all along the way. But remember, the crypto side of things is for the long haul. Other than that, some great trading swings out there. We've got a lot to talk about today. So shout out to everybody who's joining us. I don't have a time to go through everybody's name because there's always a nice big group out there. But hello, everybody. Thank you guys for joining us. I know you probably got other places you could be on a Friday afternoon, but make the most of it out there today. Les Gold from Cape Canaveral. It's funny, I saw, God, there was multiple like comets and missiles type stuff up in the sky. I don't know if you guys saw that. There was an American Airlines that said that they think they saw a missile fly over the head of the airplane. Australia had a Chinese rocket debris fly back in the atmosphere and left us great. Pretty cool. Anyway, we'll talk about rockets as we progress. Our main topic du jour, though, will be on these two clowns, Janet Yellen, Jerome Powell. I put it the trading week wrap up. Boy, it would be nice if I could get them both on the phone and figure out what the hell they're going to do. These two are like two people playing heads up poker against a table from each other, yet they're kind of on the same team. So interesting week for what's been going on with Jerome Powell as well as Janet Yellen. For those that might not have joined us for Bill Addis' show and also been on here for Tuesday's show with Jim Rogers, boy, our timing could not have been better for the bond yield type of topic in the episodes about bond yields, because the bond yields have been just skyrocketing recently, and it should be of concern going forward. Of course, that's the talk track. That's why a lot of people are focusing on the equity markets right now, saying, hey, markets are nervous, markets are jittery because of the bonds, because of the yields. Okay, yes, it is of concern, but certainly I don't think it's the one that should cause anybody to be running for the exits at this point. Now, I will bring up a couple different graphics here to help drive home this topic. Here is the chart of the 30-year. Now, what we're looking at here is the yield on it. To see it drop by so much in the past 24 hours is obviously a good sign, down 5.7%. And this is for the 30-year yield. I actually pulled up the yield curve, and it's still incredibly steep, but we are seeing a little bit of a pullback or reprieve today, if you will, on those Treasury yields. Of course, if you guys see this big move up here, when you see this yield rising, that means that the price of those bonds are dropping. So I'll bring up TradeStation here, and we'll look at... here's your 10-year. And there you can see that, it, for the better part of a year, it really has just been kind of, I guess the first part of it was slightly up, and now it's just been slowly drifting down. Classical definition of a downtrend is lower highs, lower lows, and we've been doing that the entire way here, starting in about August of last year. You notice we did bottom out right around these lows that we saw back in March of last year. Good point for there to be a bounce, but I don't think we'll see this trajectory end. My assumption on this would be that you're probably going to see it come all the way back down to this 126 mark on the 10-year. Well, if that were to happen, to me, that would mean that your yield's probably going to be above 2% at that point, most likely 2.5% if we get down here. I'm actually going to make a note to myself and set an alert. I'll do it on this bond chart here. Maybe set a line. One of the nice things I like about TradeStation, you can actually add all kinds of text to the line. So we'll say if we get to 126, I'm saying that the 10-year will be, what did I say, 2.5%? And, might even be higher than that. Right now we're at 1.6 on the 10-year, so let me drag that down here. It's on snap mode, unfortunately, so we'll have to just put it over there for now. Take it off as snap mode. Anyway, keep that there for record keeping. As time moves on, I do think we'll see it drop back down to that line, and I'll say 10-year will be at 2.55. I'll also do this just so we can keep a reference point when we said that. And that was on this date right here. All right, so now I have a track record, so we can see how badly I did on that call. Brendan says, check out the huge spike in volume. Yes, capitulation and then buying. TLT obviously is going to be the inverse of what the yields are doing. And you can see, it's not just today, though. Yesterday you really had your climactic volume, right? And obviously hindsight is 20/20, but how many times have you guys heard me say that one of the things I love to look for is climactic volume? And if we look at what happened on yesterday's chart, no one here can argue that that's not climactic volume. And you really had averaged about 12 million shares traded per day on TLT. You can see that at the bottom. And then yesterday you had over 50 million shares traded. That's capitulation. I mean, that's one where if there was a volume knob on your stereo that went from 0 to 10 or 1 to 10, it was about a 30. So yesterday was a great day to be looking at this as a potential buy point. Not only that, but they came back into a demand zone. So it was just definitely a perfect storm for it to have a bounce to the upside. Of course, yes, today we had the nice little follow through. If you're trading that 10-year or other products to the long side, you did fairly well today. Now that brings up a big question for me is, and I'm curious to get your guys' input on this as well, is what happens here? Right? What happens going forward? So I'm glad you're long TLT, Brendan, but just be careful. I do think you're going to see TLT drop again in the future. Just right now, I think it's definitely due for a bounce to the upside. I mean, we just got a little bit ahead of ourselves. If you look at what the Fed has been doing, the Fed has been purchasing the short end, right? They're purchasing the 1 month, the 3 month, the 6 month treasuries, buying those to keep that short end pegged at near zero. And what we showed you with Bill Addis the other day is that 30-year, which, you know, if you've got your short end at, let's say, zero, then your 30-year, the long end, you know, maybe you're at 0.5%, 1%, right? To keep a somewhat linear line, but not getting too steep. And now all of a sudden we're seeing that much, much higher than that. So when we have that big spike up, it makes you wonder, what is the Fed going to do? Which is why I started off with this graphic of Janet Yellen and Jerome Powell, because ultimately Janet Yellen is now running the Treasury. She's going to be selling more and more 10-year and 30-year and 20-year to help facilitate this new debt. Of course, we're probably going to get stimulus here in the next couple days, maybe a week or so, which should be the tune of almost $2 trillion more dollars. You bring in $2 trillion more dollars, well, you're going to have to pay interest on that or find some way to pay for that, and that's going to come with the selling of more bonds. Now, as Yellen does, look at her SME. I picked this face perfectly because she's just like grinning like, what are you going to do about it, Powell? And Powell looks all pissed off, right? And he's like, oh, man, what do I got to do about this? You know, do you guys think, I'm just curious here, if we see a sudden move up in that 10-year, and obviously it's gone from 50 basis points, 6-8 months ago, to now 1.6, do you think that the Fed or our government wants that thing to run from 1.6 to, let's say, 3 or 4? To me, the amount of damage that would cause the markets, not just the equity markets or the bond markets, but also cause the housing market, because all of a sudden you're pricing a ton of people out by having a 4 or 5% mortgage, that to me gets a little bit scary. And I have this weird feeling like Powell is backed into a corner here, and he's saying, the internal discussion of the Fed, which you and I probably won't be privy to at any point, is that the Fed may actually jump out and start buying longer-term maturities to try to manipulate that curve as well. To me, that opens up a whole new element of risk for them, because the risk of buying longer-term is what? If I buy short-term, there's not too much risk to me because of time. But let's say I am the Fed, and I go out and I buy a bunch of 10-years, and I'm trying to backstop that 10-year bond price from falling, which means I'm trying to keep those yields from rising. So if I'm the Fed and I buy, let's say, $1 billion worth of the 10-year that Janet Yellen is selling, I buy that to $1 billion worth, and all of a sudden prices drop, right? The yields continue to go up. Let's say they go from 1.6 to 2.0. That means the price of those bonds that I purchased, I'm losing probably pretty big time. So I have two choices. I can hold that all the way through to maturity, which is one option for them, but the Fed doesn't want to hold that for 10 years. So the other option is to sell it at a loss. And to me, this is where you run into that conundrum. On the short end, he doesn't have to worry about this. But on the long end, if we do continue to see bond prices fall, even though the Fed is buying them, they could find themselves in a major losing position. It's a real interesting dilemma. I don't know which way it's going to go. How many of you think that the Fed's going to start buying the 10-year, right? Remember, right now they're buying the short end of the yield curve, 1 month, 3 months. Yes or no? You think they'll start buying the longer-term maturities to help keep this yield curve from accelerating slope and keep that 10-year low? I have to tell I thought about this last night. It's one of those things that kind of kept me up as I was mulling it over. I actually do think you're going to see them in the next couple months make the statement they're going to start buying the 10-year. They're going to start buying the longer end to help pull that yield curve back down and keep that long-term money cheap for all of us, which of course would help fuel the economy even longer, but it puts a lot of risk on the Fed, a tremendous amount of risk on the Fed. Of course, they'll be around forever and continue to print. Let them buy it all. No, I don't think so for Big Ev. Coach says no, Merlin. I think they're going to buy both ends. Yeah, I think they are. I think no matter what, they're going to continue to buy the short end because that's just easy for them. There's not a lot of risk there. Where the risk is on the long end by keeping these things. So, but most of you people saying no. All right. Laboria, nice to meet you. You seem new to the group. Click that subscribe button. Join us on a regular basis. In fact, it would not surprise me if the Fed started manipulating the entire yield curve. Yeah. But and I agree with you, Brendan. I don't think that they are going to start. I think they have been manipulating the yield curve, but it's just so much easier for them to manipulate the short end. I think when you start to look at the long end, now they're on the hook for a bit more, and it could be a bit more dangerous. Because remember, if you buy a 10-year bond and the price goes from $1,000 all the way down to, let's say, $500, it doesn't matter to you if you hold it all the way through to maturity. You're going to get your $1,000 par value for that bond. It's if you decide to actively be selling those and get out, then all of a sudden, your $1,000 bond that you paid $1,000 for is now worth $500. You have to go to the secondary market to try to sell that. That's when you lose. If you hold it through maturity, no big deal. But who wants to hold that thing for 10 years? That's a bit of a risk. All right. Chrissy says, negative rates, baby. They will give us a $10 credit per year to keep 30-year G-bonds. 10% credit. Personally, I will say this. Personally, I would love to see it. Just to say I was part of something like that, because I don't see the U.S. getting to negative yields, but it is without a doubt a viable discussion that's on the table right now. I don't think anything's off the table, but this is that boxing match. I actually had a graphic here earlier that had boxing gloves on these two, and they were fighting each other, which I thought might be better. But, ultimately, these two are going to be working together. I'm just the monkey in the middle with a glass of whiskey. So, cheers to that one. And no, I'm not going to take a sip of whiskey for every time I say cheers today, because I didn't bring the bottle in with me, so we'll just have to keep it one glass. Brendan says the 10-year T-bonds are also the lifeblood of several sovereign nations. Correct. And again, it's obviously I'm being naive here and maybe a bit callous because I'm thinking just the U.S. But yeah, you're certainly looking at a lot of major economies and third world countries are buying our debt. That creates a big problem for them as well. All right, let's see. Brendan says okay. So that's phase one. There is the Janet Yellen piece. I'm going to keep moving on, and of course, you guys, any questions you have, please feel free to send them on in. For those that are new, just type in a couple question marks before your question here in the chat, just so I know which ones are dedicated to me and not just group chat. Are bonds traded long-term or short-term, Larry says? Both, right? You can trade them both ways. I would say if you're trading them actively, then these major rate fluctuations are of risk to you. But here's the problem. If you let's say you bought a 10-year bond, and let me pull up the chart here just so I can make sure I get my numbers exact, because I know some on the podcast will be like, well, you didn't get that date right. Okay, so here we'll use a 30-year. All right. So let's say back in August, I'm going to put a horizontal line on this chart for you so you can get an idea of where that would be. So let's say back in August you bought a 30-year. This is a 30-year, and it had $1,000 par value, right? So you paid $1,000, and basically what you got was in 30 years, you're basically going to be making 1.18% per year, right? You can see the black line, and that's rough. Let's just say that's at the time of purchase, 1.18%. Okay, right now, you're looking at several months later, so you got 1, 2, 3, 4, 5, 6. You're 7 months later, you still own your bond. You're collecting 1.18%, but right now, what's it paying? It's paying 2.15. So you're getting a 1 full percent more. So, now you have to ask yourself, do I want the yield? Do I want that percentage? If you want 2.15, you're going to have to buy another bond or sell the one that you bought earlier. If you try to sell this one for $1,000 that you bought in August, no one's going to pay $1,000. Because for $1,000, they can buy a brand new one paying 2.15%. Of course, that's what they're going to buy. So what you have to do is you have to discount your bond sale price to accommodate for that. And of course, we could go through the calculations another time. But, let's say you end up having to sell this for, let's say it's $800. So $800 is how much you could sell it for right now based off of the current yield versus the yield when you bought it. That's the problem. That's the problem that people have with bonds. And that's assuming you're going to be active. If you are longer term, it's unfortunate if you're longer term because you're looking at a 1.18% rate right now and you're going, damn, I could have gotten 2.15 if I just waited, 8 months. This is where building a bond ladder is great because you're constantly buying bonds and taking advantage of these different maturities. So as rates rise, you're kind of smoothing these things out by buying staggered maturities. The other thing you could be doing here, if you're afraid of this, is you could buy tips, right? These are Treasury. inflation protected securities. They're basically bonds that have a floating rate. So as we've gone up from 1.18 to 2.15, that bond yield would have been moving up as well, right? That's one of the perks of TIPS, just a specialty product out there. Let's see. Rob says, RKT is paying a one-time dividend of $1.11 per share. Date of records March 9th. 40% shorted. Do the shorts have to pay the dividend? Yes, they do. Yes, they do. And what's interesting is that also creates a short squeeze, right? Because there's a lot of people that are going to go, shit, if I have this thing at that date, I need to get out. So, by the way, then that's for pretty much anybody, for all of you. If you're short a stock, I don't care what it is. You short Apple, Intel, Microsoft, Google, who cares? If you're short something and they pay a dividend on that dividend date, if you held it overnight, you now owe that dividend. It would literally come out of your account. So what happens here is a lot of people will sell it or not sell it. You're short. You already sold it. Will buy it back just to cover it, which again could create a pop up. 40% is, I would start to say, is heavily shorted, right? It's getting a little heavy on the short side. Normally you see something like 10, 15%. That's no big deal. You get to the 40, 50%, that's starting to get a little heavy. You know, you get into the 75% range. That's like, my goodness, this thing's way over shorted. And then you have the, I don't know, I'll just say the illegal activity that went on with GameStop, which allowed people to short 138% of the shares. That is kind of crazy to me. All right, so great question out there. Glad you sent that one in. Pedrito, you changed your name, huh? You switched it up a little bit, Pedro. Let's see. Oh, nice, Steve. Well, you know, you can keep both Jeff Manson and myself on. If you're in there, say hi to Jeff for me. Tell him I can drink. He's on OTA time, so he won't be able to drink. It's one of the reasons I like doing my own teaching. I can do what I want. Cheers to the management at OTA for telling me I can't drink on Power Trading Radio, but I can do it on my show. Don't worry, I'm not going to be like Elon Musk and smoke a bowl. I'm not going to do that one. Let's see. Sava says, has the Fed still been buying ETFs? I don't know. I don't know the Fed's buying actions. I should have asked Bill at us yesterday. Honestly, Bill is so entrenched and knows almost every single thing the Fed is doing. I feel so honored sometimes to have him on because he literally teaches classes for the Fed. He teaches for some. If you were to name some of the top banks in the world, the major financial institutions that people say are running the markets, he teaches for those guys, the bond program, which is pretty incredible. And I love he just comes on here and does it for free. So that's awesome. We get free education out of it. Leanne. Hello, Leanne. How you doing? Leanne says, what are your thoughts on firms like Bitwise Investments? Now, you sent that question. I didn't get a chance to check out Bitwise. There was one. This might be the one that I was asked to review a while ago. And Bitwise, well, their website looks like crap if that's what it is. One second, I'm just typing it in. Bitwise Investments. There are a couple here that I'm extremely skeptical on, and I don't know about Bitwise. I'll check it out maybe more in detail later on. But right now, because there's not a ton of regulation in this space, you're seeing some ETFs come to market, right? The exchange-traded funds. Now, obviously, I would buy into those because those are traded on a securities exchange. The SEC is on top of that. You have some protection. A lot of we'll just say unscrupulous people are starting these types of cryptocurrency companies, and they're risky in itself because they're not insured. The SEC is not really on top of that stuff yet. So I'll check out Bitwise for you, Leanne. I need to really look into it and see exactly what they do or how they do it. But for the most part, I'm skeptical on most Bitcoin companies. You guys see me posting stuff on BlockFi, about BlockFi, just because I've had money there, and the way that they're going about their business, it seems like they're doing things above board, very clean. You know, they're very public. It's not like this shady one I've never heard of. If there's a company that like I've never heard of, it makes me just go, they're probably not that mainstream, because I'm pretty involved in the world. I've never heard of Bitwise Investments, so you know, I don't know. I'd be a little skeptical on just because I've never heard of them. I can't remember. There was one. There was one we did a little while ago where I actually pulled up the video of the guy talking about the company. I don't think it was Bitwise, but it was something similar. And the guy was talking about how, you know, guaranteed no losses and you're going to make, 100% rate of return per year. And I was like, look, just go away, right? Run to the hills if someone's guaranteeing you that. Like right now, and Brendan's with me on BlockFi. I've got one Bitcoin. I'm actually going to move more to BlockFi, and the reason for that is, it's paying 6% interest on Bitcoin. So I plan on holding Bitcoin and not selling it for probably 5 to 10 years. But I may as well just be accumulating interest on that as well. And 6% isn't too bad. Some of these other sites are offering like 20, 30% interest on assets. You're like, well, where are you going to make that? To make 20%, I mean, you're loan sharking out there. That's bad stuff. Oh, yeah, BitConnect. Remember that one? If you guys want to see something funny, there was a company called BitConnect years ago, which was a total scam. And there was a guy, God, I can't remember his name, but it was so funny watching the recording of this guy standing on stage in front of thousands of people. BitConnect. Careful. Right now, if it sounds too good to be true, it probably is. But Leanne, remind me. I'll look at it this weekend, but remind me if I don't bring it up on Monday. Let's see, Monday. Who am I gonna have on Monday? Bob Dunn. I have Bob Dunn on Monday, so yeah, I'll probably do it on Monday. Multi-level marketing fail. Correct. That's all it was. It wasn't one big hoax. Leanne, I guess I should probably ask, what are you interested in about them? What is it? Is it their rate of return that they're promising? What is it that makes you want to go with that specific company? We can probably point you in somebody that I know is legit, or at least have a better opinion of, that helps you achieve what goal it is that you want to achieve. All right, Brent says, I'm keeping some Bitcoin in cold storage, though. I'm going to reallocate risk Bitcoin to BlockFi due to regulatory risk. Yes, exactly. So I'm probably going to move another Bitcoin. So I'll probably have 2 or 3 Bitcoin sitting on BlockFi. Because I'm looking at it now, and I think I told you guys I started in December. Unfortunately, I'd have to do all kinds of stuff to log you in here, but just to give you an idea, let me see if I can do it. I was like, one of the things I don't like to do is spew out numbers, and people are like, oh, well, I don't believe you. Well, here, we'll just show you. I'm logging into my BlockFi account here real quick, so just bear with me as I get this done. Because, of course, I did what you're supposed to do, right? 2-factor authentication. Whatever you guys do, always make sure you have 2-factor authentication. There's 2 things you should always do. Let me get this in. Number 1 is always make sure you use 2-factor authentication. And above all, always write down it's called a seed code or a recovery phrase. Write it down as clear as possible and put it somewhere safe. All right, so it's funny. It actually dropped dramatically because they're paying me in Bitcoin. As of 2 days ago, this was $580 in interest paid, but of course it's in Bitcoin. Oops, sorry, you can't see it. Here is my BlockFi. I'll probably move another one over, but basically since December, it was mid-December we started this. That's mid-December, mid-January, February. So in 2 months, it's already paid me $386, and there's another $200 about to be paid out on Monday. So that's decent interest that you're making on this one. They also reduced the fees that they're charging you to take things out. So I'm pretty happy with this so far. There are other companies around, guys, that are international. Like I saw one that pays 9% for holding Bitcoin with them, but they're out of Romania, like Bucharest. And I went, you know what? I don't want to. I'm not going outside the U.S. I'm going to stay with U.S. assets. That to me is safer, even though I'm not making as much. Okay, let's see. What else do I got? I know something that got burned. Binary options company. Yeah, I'm not a binary options kind of guy. I think I mentioned that on the program. CFDs, binary options, depending on who you're trading with, you're trading directly against them, and it can be a scam. I've been in ETFs because I work for a big firm. I'm pretty restricted. Okay. So Leanne, so basically that's just a company that you want to invest in outside of your work, right? It's something you want to allocate some capital there and hopefully gain a rate of return. If you're going to be looking to Bitcoin, I would stay with the grayscale investment stuff, which is going to be GBTC, ETHE. These are trust funds that are publicly traded on exchanges that actually own those securities, and Grayscale seems to be the leader right now. So that's where I would go to. Hey, Tibor, I'm not saying anything bad about Romania. I would love to go visit Romania. What I'm saying is I don't want to have my account set up in Romania where I can't do anything, right? So let's say, there's a good example. Please, that was not meant to be anything against Romania. I would love to go to Romania. My goodness, it's high on the list. If I have an account in, let's say, San Francisco, and I have an account in China, and I have an account in Romania, and the Chinese account, all of a sudden, I can't access it. Romanians cut me off altogether, and I can no longer access my webpage. And the same thing for San Francisco. I can go up to San Francisco with a 12-gauge shotgun and stand at the door and get some attention. I can speak English. My Romanian, a little rusty. My Chinese, not so good. So the ability for me to go to those places personally and try to get my money back, not very good. Then I have to count on maybe the regulatory side of this, and maybe I get law enforcement involved and talk about fraud and theft. Think the Romanian government's going to help me for my measly Bitcoin or 2 or 3 Bitcoin? Probably not. But in the States, I have that recourse. I think that one of the privileges I have as a U.S. citizen is they're going to try to fight for you, right? So there you go. That's the only reason why. If I lived in Romania, I would probably say the exact opposite. Like, I don't know if I want to go and have my account in San Francisco. I want to keep it clear so I can go get it if it all goes to pot. So cheers. By the way, let me know. I'm coming to Romania. I need a tour guide. On top of the clock tower, are you talking with my sniper rifle, waiting for the guys to come out? Yeah, Tom. I'm really glad we brought that little calculation up. It's kind of cool. For those that don't know, we showed this one a while back. I'll show you here on TradingView. Let me see if I can find it here. So on TradingView, we did a little calculator which will show you the value of Bitcoin Trust relative to Bitcoin to tell you whether it's overvalued, undervalued. And you'll notice right now, this blue horizontal line, anything below this blue horizontal line, it basically means that you are overpaying. If it's above this blue line, it means that you're buying at a discount. And you notice that this buying GBTC right now, you're paying almost a $2,500 discount per Bitcoin. Kind of a cool little thing. I think it's a really cool feature to help you time this market, right? It's one thing to time the moves of Bitcoin, but now you're actually, because Grayscale, that's who runs this GBTC, because they are constantly buying and selling Bitcoin to accommodate for inflows and outflows of the trust, the ETF, there's going to be imbalances here. And so basically you're kind of just doing arbitrage because you know over time at some point this is going to come ripping back down and it'll now be trading at a premium. So it's awesome. What else we got? Hey, Don Fron, happy Friday, my friend. Good to see you. The Federal Reserve is going in crypto world and is going to arrive a lot faster than anyone thinks. Well, one of my good friends and colleagues, Gary, we did a show in 2017. We were doing a show for his Facebook page. He's got a bunch of followers out there, and one of the questions was about a Fed coin. When do we think that the U.S. government's going to go pure digital? And Gary was like, oh, by the end of the year. And I'm like, no, man. There's no way it's going to happen by the end of 2017. Now I go, you give it 5 years? Now I think you got a real possibility. Because remember, first off, they have to, I think what they're doing now is just sitting back and watching the technology, watching what's going on with things like Ethereum, with Litecoin, Bitcoin, Dash, all these different ones, and seeing which technology might work best for us, all right? What's the most secure? Because obviously if they create a Fed coin and someone hacks that Fed coin and starts just moving money all over the place, it all comes crashing down. So they need to make sure that the system is proven and tested. And I think right now is almost this testing period for the Fed to look around and go, okay, which project do we like? And maybe ultimately they go with the Bitcoin model. It won't happen because Bitcoin moves too slowly. They're going to want something that's going to have, 2 to 3 second transactions like Visa. So there's other candidates out there. Now, for me, I mentioned yesterday, it's going to happen. I think it's a 100% chance that they're going to move to a digital currency. It costs so much money to clean, to print, to distribute, to design the US dollars, to ship it. It's just such a cumbersome piece that why bother? If we can have it where it's 100% digital and I can just simply tap my device, or like I said, it'll probably be like my earlobe will be, you just tap it and it'll pay with an RFID chip. That's probably the future of it. It's just going to save them so much money. Plus, the big reason is it's totally trackable for every single thing you do. So I think that that's going to happen very soon. My guess is probably in the next couple of years, it will be implemented, and then they'll slowly start to phase out. Coins will probably go first, right? Get rid of coins because that's super expensive, and then bills will go away, and then all of a sudden we are left with a system where we're completely tracked by our government. Now, there's a lot of other hypotheses I have on what happens, but we'll do that on a different show. With Grayscale, do something to get Bitcoin back in line with Bitcoin or let the market do it. Will Grayscale? Well, they're trying to keep up with inflows and outflows. That's predominantly their goal. So I don't think they're trying to keep up with Bitcoin per se. They're just basically, where every share you buy is 1,000th of a Bitcoin, right? So if someone goes and buys 20,000 shares of GBTC, they're going to now need to go out and buy 2 Bitcoins. Is that right? So 1,000 Bitcoins without, yeah. So they have to constantly be moving. And if you look at the volume on GBTC, I'll bring it up. These guys have a daunting task. Volume, I think let me add volume on here so you can see it. Oops, already was there. Volume today was 21 million. So 21 million have changed hands today. Now, of course, that could be in, could be out. Of course, there's all kinds of fluctuations. But if we take 21 million and you divide that by 1,000, well, I mean, you're going to see that they have to go out and actively buy or sell 21,000 Bitcoin today. That takes time. There has to be some kind of relationship there where they can be moving back and forth in Bitcoin. And if there's a big spike, for example, let's go 15-minute. Oops, I'm so used to a different platform here. Here's 15-minute on GBTC. Early this morning, there were big swings going on in this. I mean, Grayscale went from 45 all the way to 40 in a period of 30 minutes. That's a huge move, right? Well, they're just buying and selling Bitcoin to accommodate for those inflows and outflows. So that's pretty much all they're doing. And Daum says, what will happen to the numismatists? I'll say that one 3 times fast. It's a good question. I feel bad because I think there'll always be a collectibles type of market. You'll have rare coins and precious metal dealers, no problem. Your 1905 Buffalo Head nickel that's worth $200,000 will still have scarcity and value to it. But is anybody going to want to have my fresh? Oh, I got a quarter right here. Will there be a market for the? I don't even know what I got here. The John Brown Port Harper Ferry 2016 quarter. Anybody want that one? Hey, I'll give you 18 cents for it. I don't think that'll happen. My guess is you will have a black market at some point for a lot of items, but they're going to push it to be pure digital. Brendan says added more ETHE today. You'd be happy to know, Brendan, all the proceeds. Remember, I told you guys I sold out of all of my Ethereum. I bought back in the exact amount of shares I had before. I thought about putting all back into Ethereum, and instead I bought back the exact position I have in Ethereum. So essentially, I moved my price average from not average, but I got it at 17.28, bought back in at 14.50. All the proceeds of that I took and I bought a bunch of Polkadot. So I unfortunately I bought a little bit high. I really didn't want to pay 33. But that's what I bought back in. So I'm in some Polkadot now. I should have gotten in at 17 or 7 when you told me about it first time. I can't be as quick as you, Brandon. Number says, how do you get that BTC USD chart on TradeStation like that? It's pretty simple. Basically, there's a formula that I just built out, and you just type it in, and then you can see here the formula is. So it's BTC USD, so that's Bitcoin, and then subtract GBTC times 1,000. That's the formula. And we did the same thing for Ethereum. You can do the same thing for the ETH one as well. I think we were a little bit off on that one. I think, Tom, was it 97 or should we change it to 100? I think it was supposed to be 100 because it's supposed to be 1/100th of a Bitcoin or of an Ethereum. But it's the same thing. ETH, Ethereum USD minus ETHE. And I had on their website, they said it was 97.31858. So that's what I changed it there. Whew, boy. Lots to talk about. What time we got? 34 minutes in. I haven't even got to any questions yet. All right, let me get to a question here because I think this one's kind of interesting. Larry sent this one in. No, not Larry Jacobson. Larry, who might be with us today. He says, I've seen this so many times on stock twits. Is this just hype? Oh, this is one that I love. And for the podcasters out there and those that listen to the podcast, thank you so much. Please set your sell orders so that vultures don't borrow against your shares and short the stock. Is there truth behind this? This, my friends, requires a sip of whiskey. Okay. Here's how it works. There's been a lot of questions about order flow as well, so this might help you understand the mechanics of your bank, your brokerage firm. If you open a Charles Schwab account, a TradeStation account, an E-Trade account, a JP Morgan account, I don't care where you open your friggin' account. If you read the 40 to 700 page documents that you're supposed to read and sign everything and agree that you read it, which none of us here have, I doubt anybody's actually read 100% of all the different documents. Hey, Larry, this is your question. In there, it says that they reserve the right, it doesn't say it exactly like this, but in legalese speak, I believe it's called agency order with subscriber commission added, if I'm not sure, if I believe that's what it is. They all have the right to loan out your shares at their choosing to anybody that they want, whether that be Citadel Derivatives, Melvin Capital, Merlin Rothfeld. basically, we've done the example before. Let's say every single one of us here is a client of MR Bank, right? Or MR brokerage firms. So you're all my clients. And you all have money or shares with me, right? And you're trading actively, doing whatever you want. And Don, he's got a big portfolio of Tesla, right? He's long Tesla and he loves Tesla. He's gonna keep Tesla forever in his long-term account. But I look over there and Sava sends a request to short shares of Tesla. What MR Capital can do, or MR brokerage firm can do, is I'm literally going to take however many shares Sava wants. I'm taking those directly out of Don's account. Don doesn't know this. He has no idea. But I'm going to now allow Sava to borrow those shares and sell them on the open market to somebody else, because Sava thinks that Tesla's going to go down, obviously. So should Don want those shares back, all he has to do is hit sell, right, to get out of his long position of Tesla. In his mind, those shares are sitting in his brokerage firm. No one's touched those. In reality, they've been loaned out. Now, if I don't have, so let's say Don is the only client that I have that owns Tesla, I'm probably not going to lend out those shares, right? But let's say I have a pool of 100,000 shares of Tesla available of all my clients. All my clients collectively own 100,000 shares of Tesla. And somebody wants to short 1,000. Well, no problem. I'll loan out 1,000, but I can't lend out the full 100,000 because that would put me as a broker at risk, because what if everybody tries to sell at the same time? That makes sense, everybody? So what is interesting in this example here that Larry sent in is you see here that in StockTwits it says, please set your sell orders so that the vultures don't borrow against your shares. There is truth to this. The reason this is true is because you have a sell order for those shares, you've basically told the brokerage firm, I want to sell those shares. And what you're going to do is it's now going to remove those shares from the pool that they're loaning out. So in the original example, I think I said we have 100,000 shares total of Tesla. And Don puts a stop loss order on his Tesla shares. In theory, that 1,000 shares is most likely going to be removed from that pool because the brokerage firm goes, I know he's probably going to sell. I can't take that risk of lending out those shares. That makes sense? So there is some truth to this. Of course, that said, I'm not on the brokerage side. I haven't been able to sit there and look at their screens as they do it, but that's what should be happening, is it should prevent them or at least make them short less or loan out fewer shares of their clients. They do this with checking accounts, correct? Yes. Oh, yeah. This happens to every single person that owns a banking account. I don't care what bank you have your money. If you have $2,000 sitting in a Chase Bank or Wells Fargo, they've loaned that money out. And the fractional reserve system basically means all they have to do is keep a percentage. I believe it's 10%, maybe lower than that now. I haven't checked the reserve requirements. But you know what? Since I want to be on top of it, let me check out current reserve for USA. This was from March. Reserve requirements. Now it should be on deposits. Great. Doesn't say low reserve tranche. Oh, great. I can't tell now. I thought it was like 10%. So let's just use 10% example. I can't pull it up real quick, and this is why I want to have I'd love to have researchers that do the show for me. If you put in $2,000 in your bank account and they have a 10% reserve requirement, then they are supposed to keep $200 for you. That means $1,800 of that gets lent out to somebody else. And what they're doing is they're lending it out. You know, you go to get a loan from a bank. Great. You're going to pay your 5% for that loan. They're paying you in your checking account for that $2,000. 0.01% interest. So that's how banks are making their money. Of course, it's fees as well, but that's the main way, is by lending out the money you keep there. And that's essentially what a brokerage firm is doing as well. So great question there. What else? That's awesome. I'm going to do that with my rocket ships. Yeah, you know what? I was told, and I don't know how true this is, but I was told by a guy who worked for brokerage firm years ago, he says, you can call your broker and say, I don't want these shares to be shorted. Now, who knows if they do anything with that, but in theory, you've told them to not put your shares that are long in that pool where they can loan it out. So that's what I was told, but again, until you have someone who is actually on the trade desk and looking at the electronics of what's really happening, I don't know if you can prove it. But in theory, Larry, great question. I would say StockTwits is right. By putting stop orders on it, you most likely are going to remove your shares from that pool of liquidity that they're loaning out for shorts. Merlin, what do I think about going full Max Kaiser per hodler? I'm more of a market timer guy, but with regards to crypto, I would say right now I'm a perma holder for sure. I'm a hodler. I think that, what happened with Ethereum, I did that because of the futures market opening up, and that really didn't have much of an impact other than 2 nights before. But, yeah, there you go. Thanks, Kev. I thought it was 10%. Thank you, Kev. Appreciate that. Oh, wow. Interactive Broker allows you to make interest on shares they loan out for shorts. That's interesting. But see, at least there you have a little bit of encouragement to loan out your shares. But let me be honest, though. If you're long something, you don't want them loaning out shares. You don't want it because you're basically someone's betting it's going to go down. That adds selling pressure to the market. Now, of course, there could be a short squeeze later on, or they're going to have to buy to cover at some point. But I don't want them selling my shares. So I would rather them not allow shorting, but that's just the way it is. My opinion about Apple. So much for all the sent-in questions. I need to get to the sent-in questions here because I encourage you guys to send in questions, and I haven't answered any except Larry's. My thoughts on Apple. Right now, you have what's called a bullish harami on it. It's actually near an area that is kind of interesting, but I'm not a huge fan of it right now. I feel like it's broken some pretty significant trends. And if you look at what Brandon was talking about yesterday on the show, you've not only have you failed to make this higher high, but now all of a sudden we're breaking through lows and doing it pretty quickly. So I'm not a big fan of Apple at this point. Of course, you guys know I don't like Apple anyway. I think there might be some buy points at some of these demand zones. I mean, you can see we bounced off this one pretty clearly right now at 120. There's another little guy right around 114. To me, one of the more important ones would be right around 108. But, this most recent downturn, this just tells me it's fallen out of favor. You've got volume increasing as the move's selling off, so that to me encourages or actually supports the move to the south side. I wouldn't be buying Apple here. My thinking would be I might reverse course here, and if I do see rallies back up, I'm looking at potentially shorting Apple because it's just starting to exhibit weakness. Now, look, this same thing happened back here in September of 2020. Right, you had a pretty significant sell-off, but it came back down to a trend line. If I was to draw your trends here, and of course we can torch your chart long enough, put that trend anywhere, you really bounced off that trend line. Well, the question now is, where the heck is the trend line? Do I draw the trend line from that point through here? That's probably where I would have drawn it. Well, we broke that 2 weeks ago. Now the question, as Brandon points out, is this a downtrend, or are we just going to see it chop sideways for a little bit? Right, that's the question I have. So I'm not bullish on Apple. What happened? Just because Don's here, I got to look at Tesla. Tesla's got a similar picture, right? Tesla kind of put themselves in a. It's interesting how when they said they were buying that $1.5 billion worth of Bitcoin, they really didn't pop up much at all. The shares didn't. Bitcoin did. But you had. It certainly took a big dive when Bitcoin sold off. And right now, looking at 675, I know for a lot of people this is a pretty attractive price point. I would have to wait and see. I think you'll probably see a bounce up in Tesla at about that 800 mark. But from there, if we don't get above that 800 or close above 800, I think you might be setting up for a bit of a downtrend here. I know Don's probably cursing at me right now. Sorry, Don. Chrissy says, can you look at the Dixie and Silver? Let me real quick. Okay. Yes, let's do that. Let's look at the Dixie. $DXY. So, as I mentioned before, I've been somewhat bullish on the dollar because of the trend. Now, what's sad, at least, is the last 2 weeks, right? Because it was starting to break. I'm going to play the hard right edge with you guys, which means hard right edge is a game I love to play where you just hide data. And if you look back here, I was looking at this saying, I like it. I like it because we're finally breaking above these most recent highs. We got some closes, and it's like, okay, here we go. Good. This is what I wanted to see, right? It looks to me like on this picture right here, trends have reversed and starting to move to the upside. Well, this is the challenge. It came ripping right back down, but it did not make a new low. So to me, you end up finding yourself in a situation where I would just go like this with the dollar index. Great. Of course, now I've got Teams on my computer, so what's happening is they're going to be sending me a bunch of videos we recorded this morning, and they're going to keep popping up. It's going to drive us crazy. Anyway, there's what I see with your dollar index. Right now, I think you're going to be range bound in between that. I was really optimistic once we broke it a couple weeks back to the upside and hit that 91.50. But yeah, I still think you're looking overall bullish, even though the Fed keeps printing more. I felt like that trend was broken. So we'll have to wait and see. If it gets below 89, well, we're back to that south side. Short it. Done. All right. Perfect. What else we got? Silver was the other one. Oh, Chrissy says, I'm just waiting, setting up for that 88. Dixie to break below 88. Yeah, right. I mean, and that's exactly it. It's like I don't want to formulate too big of an opinion here. I certainly felt bullish a couple weeks ago on it because we made some new highs. But now, all of a sudden, okay, back off my bullish assessment. We'll just say range bound for now, and I'm just setting boundaries between 89 and 91.50. Right? Want? Sell some spreads. If not, I'll just wait for it to break out. Joe Little. A, I love your graphic, and B, thank you so much for the donation. I appreciate that. Always nice to get a little homage, so thank you very much for that one. And Joe, you're new to the show, so hit that subscribe button. I love having new people join us. All right, what else do we have? Silver was the other one. Oh, yes. Well, I guess I'll just do it off of SLV. I could pull up silver futures. We'll do it off of silver. Unfortunately, we have the Reddit pop, the Wall Street bets pop here. I wish I could just erase this whole red candle. Let's see if I can do that. Why don't we try to do that? I think I might be in snap mode. I'm going to put that right there. Let's see if I can block this damn candle out. Solid. Make it white. I'm doing it transparency. I want it to be solid. Ah. Well, unfortunately, it's not going to let me do it. Oh, yeah, I'm doing the fill. Solid white. Give me a white fill on that box. Yeah, unfortunately, it's not going to do it. Okay, anyway, if we can remove that one red candle, it does look like it's going to be moving up, right? You can tell just here by the bottom, it's been making higher lows, slightly higher highs, although it feels like the strength has been waning. It hasn't quite made a convincing higher high. So I'm not as bullish as some are on it. I am bullish on silver long term for sure. It's just, it feels like the strength in silver kind of slowed down here over the past few weeks. But that's fine. You know, it could pop to the upside and all of a sudden we're off to the races again. It feels like that's what it wants to do just because it's been making higher lows. And to me, when you draw this trend line, sorry for that little beeping noise, guys. It's going to continue to go on for the rest of the show. You know, I'll just draw it there. I know it's not the best way to draw a trend line, but you get the general sense that it's making higher lows and just continuing to do so. So pressure's on the sellers right now because the buyers are winning that tug of war. They're pushing it higher and pushing it higher. So I'm still optimistic and bullish on the dollar. Now GLD, that's a different story, right? You know, we've got that downtrend in place. We talked about it back here where if it doesn't break the highs, it's going to keep drifting lower, and it's been kind of listing, just slowly going down for GLD. Now, let's see, where are we at? Are we near an area where it would potentially bounce? I think you've got a pretty decent spot around 157 on GLD, which is still $4 lower, so another couple percent lower than where we're at now. But you did have real big high spike in volume today. Now that obviously, when we have an anomaly spike, this case it's over 2 times normal daily volume. You know, those represent climactic volume, and quite often when you get those big spikes of volume, you get a reversal. So to me, I'm interested in this as a potential buy simply because the climactic volume. And let me mouse over some examples here to show you. So see where my cursor is right now? You have that gigantic red candle and same amount of volume as today. Next couple days, we had a nice little rally up. Here's another big spike that was slightly higher. Right from there, it was a big sell-off and then rallied up for a couple days. Here's the next big one. It was a huge sell-off and then rallied up for the next 4 days. Here's another huge sell-off, rallied up for 5 days. So the only sad part is we're on a Friday. You know, it'd be nice if it was like a Monday and this happened because that momentum is still fresh. Market's going to be closed until Sunday night on the futures. So the sentiment could change by then, but I still like it as a potential buy point here. I wouldn't just buy gold right now. I'd be watching to see how it performed in the futures market when it opened on Sunday night, and if I do start to see green candle form, then maybe I would jump on the futures or wait for the Monday morning open on GLD. There you go. Yes, Cardano number 3. Luckily, I bought a ton of Cardano a while back, and it just did nothing for the longest time, and now Cardano is one of the only cryptocurrencies on the upside today. It's having a nice move up today. Okay, let me see. I am way going to be a bad long show here. There was one I wanted to get to. There's two here that I want to get to, and it's crypto related, so I apologize for the people who just get sick of us talking crypto, which has become a lot more lately. Michael says, what are your thoughts on the pros and cons of using Purpose Bitcoin ETF to get on the Bitcoin train? Can you explain to us the difference between BTTC and BTTCU? I don't know those ones. I'm not familiar with those at all, but bottom line is this. When these new ETFs come onto the market, whatever they are for Bitcoin or cryptocurrency, they're going to start off with low volume, right? They'll start off with low volume and ultimately they'll build up to higher volume, but you kind of have to just wait for it. So I'm going to see if I can bring up BTTC. Yeah, I'm not getting anything on it, so I'm not even sure where that's coming from, unfortunately. But Grayscale, GBTC we'll say that the pioneer of it. And what you're going to get is a ton of copycats given the popularity. Right now, I would just say, just like any ETF. Remember yesterday or on Tuesday, we brought up ETFs of Russia, right? There's going to be a ton of ETFs for Russia, but only one of those is very liquid. Very liquid. There's a ton of real ETFs for real estate, but only a handful of them are very liquid. To me, that's one of the big determining factors in do I want to buy this is the liquidity. So when I was to line up BTTC.B, which I don't know where that trades or what that is, if I were to line that up with Grayscale is going to run circles around it with regards to volume because the other one's brand new. Now, maybe at some point, the Purpose Bitcoin ETF now far exceeds or gets close to trading the same amount of volume as Grayscale. Then what I'd be doing is I'd be putting them side by side and saying, who's giving me the best fee? Now, I know there's a lot of new competition. Oh, is it BTCC? Okay. Thank you. I was like, I don't know BTTC, and it's the Purpose one, so that's going to be So let me go, let's see if I can bring that one up for you guys over here. But bottom line is, you can just compare them. Okay. Thank you, Brendan, because I've never heard of that one in the U.S. markets. But here's the chart of it. All right, so today you've had pretty good volume, 330,000. But is 330,000 a lot? Well, look at GBTC. Now, the only reason I would, say that you can't go with GBTC is if you have a Canadian account. GBTC did 21 million shares today. That's far cry better than BTCC or the derivatives of it, which were BTCU and some other ones. So my feeling on those, if I have to answer that question, is simply it's all about the liquidity and fee structure that's assigned to those, Michael. Not that I have anything against the Purpose Bitcoin ETF. It's just right now, it's not a major leader in the space. So I'm going to try to be trading the ones that have the most volume and give me the best fee. That's it. Cool. Well, thanks, Brendan, for clarifying that. I was like, I kept looking for it. I'm like, I don't know who the BTCC is. The other one is this. You mentioned before that you don't like Binance since it isn't based in the United States. I love Binance. I think Binance is great. I just don't want to put a lot of my funds there because it's not based in the U.S. Now, they do have a U.S. office now. I have had some challenges accessing my account, and we'll say that. Now, let's see. What was the rest of the question? I totally get that, but I'm curious how you feel about just buying on Binance and moving coins to cold storage right after. I'm looking for a place to buy altcoins and I'm considering them. Dave, do it. I absolutely think that you should do it. Why? Because Binance is probably one of the cheapest ones. I've been wanting to do a special show for those that were interested, which is I was going to line up and show you all the major brokerage firms from Binance to Coinbase to Kraken to Gemini and show you the interfaces, what they look like, to show you the trading platforms, both their basic versions, which usually charge more in fees, and their pro versions, and then have a table of the different breakdowns of fee structure. When I built that cryptocurrency class for Online Trading Academy in 2017, Binance was hands down miles in front of everybody with regards to fees. They were so much cheaper than Coinbase. Coinbase, if you don't know what you're doing, you're going to get hosed on fees. I already showed you if you use their base platform, which is Coinbase.com, versus pro.coinbase.com, you're going to be paying almost 4 or 5 times as much in fees, depending on which platform you use of theirs. So, it is definitely important. If you're a small guy who's buying maybe, a couple $100 worth, not that big of a deal. But, when you're getting bigger and you're swinging some pretty big share sizes, as I've been doing lately, those fees add up very quickly. So I definitely think using Binance, or better yet, Dave, go check out the different fee structures for these brokerage firms. I'm going to try to do it, but I've got so many other things. I want to go enjoy some sunshine here, but I would definitely be happy to do that. It's just going to take me a little time to show you them all. But I would build a spreadsheet and say, if I'm going to buy $100,000 worth of cryptocurrency, I don't care which exchange, because I'm going to buy it and simply move it off right away. Find whoever's going to give you the best fee. And remember, there's two different fees. There's a maker fee and there's a taker fee. The maker fee is genuinely much lower. Generally much lower. All right. I used Binance a few years ago. Loved it. Yeah, their interface was a little clunky, but they had access to so many different cryptocurrencies. I believe right now they do have, of all the exchanges in the world, including Huobi and others, they have the greatest selection of altcoins, which, you know, for me at the time, that's why I opened a Coinbase account, because it's the only place I could buy Cardano at the time. And that's where I have my biggest holding of Cardano, is sitting at Binance right now. Binance is the exchange I trust the most. Keep in mind that no other exchange supports hardware key valid verification like YubiKey. Nice. All right, I gotta wrap up. Kev, I'm gonna get. I'll write that one down, and we'll go to that one on Monday. I gotta get out of here before the end of the show. I'm supposed to be somewhere at 3:00. Well, I'm supposed to be at the other computer in my office over there, which is a work computer. But let me run through economic calendar. And man, I had so many great questions. Batanai, you had a whole bunch of order flow questions that I wanted to get to, which we didn't get a chance to talk about today. I will do that on a Friday show, so bear with me. We're going to get there. I wanted to show you this because this is interesting for me and what happened on the economic calendar today. This was a big surprise. Not only did I was kind of surprised by the expectation that personal income was going to jump so much. Check out that personal income. I mean, that's a gigantic pop in personal income. We went from 0.6% growth month over month, which really isn't that big of a deal, to the expectation we're going to get 9.4% growth on personal income. Now, normally with personal income, you're looking at gains of, 0.3, 0.2, 0.1, somewhere in there. The last time we had such a big spike in this was May of 2020, when we went all the way up to 10%. Now we're back at 10. Actually, we went to 10.5%. Right now, we jumped to 10%. That's the largest spike we've seen in years, other than that May 2021. We haven't come anywhere close to that. So I'm kind of curious as to why that is. Maybe more unemployment benefit, activation, whatever. But that was a big surprise for me. That was the only thing that really shocked me today. You also had some earnings today. Cronus stinking up. You got the chronic stink over here with Cronus on their earnings. They were supposed to lose 6 cents per share. Hey, they lost 19. But who's keeping track? Losers. Anyway, they were only down 3% on that news, so that's not horrible. I wish I could miss my earnings or my targets by 200% and still only fall 3%. Foot Locker doing all right, up actually down 8%, but their earnings beat as well, and that was what happened today. Now on Monday's session, which will be the end of the month, we've got March 1st. You can see here we've got a lot of stuff going on for the U.S. I will highlight those ones for you here. Manufacturing and construction spending, kind of the big deal for the U.S. on Monday. All of those are going to happen during market hours. You also have a rate announcement for Australia on Monday evening at 7:30 p.m. Euro has German retail sales as well, so some pretty interesting numbers coming out on Monday. Now, our next piece here, earnings. We've got NEO. Oh, the darling NEO. Everyone's so big on the NEO car company. They're reporting earnings on Monday after market close. You also have Novavax after market, and then I left it on here as kind of a joke. At the bottom, you've got Hertz. They're going to change their car company to Payne, actually, because Hertz just sounds too bad. They've been on this list for months, guys. I haven't seen them report earnings. It's always an NA, and they're estimating to lose $1.13. To me, this is maybe just because they're stuck in bankruptcy court. I'm not sure what the deal is, but goodbye, Hertz. This will probably be the next pump and dump for Reddit users. Gotta love it. All right, 58 minutes in. I am going to stop at 1 hour again today. All right, that will do it for today's show, everybody. If you have comments, questions, if you are new, as I see we've got a bunch of new people joining us today. Love having some newbies. Click that subscribe button. Of course, if you like today's show, give me a little thumbs up. That always helps as well. For those that do send in comments and questions over the weekend or any time, really, feel free to email me. Name's on the screen. It's TraderMerlin@gmail.com. I am building out a pretty interesting list of guests for next week. I will update that list probably tomorrow, so if you go to TraderMerlin.com, I'll have that list all updated there. But there's going to be 2 guests on the program that you've never seen before. They're going to offer some very interesting perspectives on the bond market and also showing you a brand new stock exchange, kind of a futures type of exchange. It should be a really cool show. So Tuesday and Thursday are those. And then Monday, my guest will be none other than Bob Dunn. Nothing like a 45-year vet from the CME. Talking war stories, talking riding the wave. You know, he's all, you never know where it's going to go with Bob. He's always so much fun to have on the program. So if you have something specific you'd like me to ask of Bob Dunn on the Monday show, email me at TraderMerlin@gmail.com. It's on the screen there. Until then, happy trading. Have a fantastic weekend, everybody. Go enjoy some sunshine. I'm going to take the dog to the back bay. I'll see you Monday.